Welcome to Smart Stock Watch. Today is October 22nd, 2025, and we're diving into AT&T's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss AT&T's performance, especially given their strong results this quarter.
Absolutely. AT&T has been making waves with its investment-led strategy. Let's explore how this has impacted their financials and market position. Revenue and profitability overview. Let's start with the top line. AT&T reported revenues of $30.7 billion for Q3 2025, a 1.6% increase from the previous year. John, what are the key drivers behind this growth?
The growth is primarily driven by higher mobility, consumer wireline, and Mexico revenues. The strategic focus on wireless and fiber offerings has paid off, with significant customer additions and increased service revenues.
And what about profitability? How did AT&T perform in terms of net income and free cash flow?
AT&T's net income surged to $9.7 billion, largely due to a gain from the sale of their DirecTV investment. Free cash flow also improved to $4.9 billion, reflecting strong operational cash generation and disciplined capital management.
EPS performance and analyst expectations. Now let's talk about earnings per share. AT&T reported an adjusted EPS of 54 cents, slightly below the forecast of 55 cents from 6 analysts. John, how should investors interpret this?
While the adjusted EPS came in just below expectations, it's important to note that it remains consistent with the year-ago quarter. This stability, despite market challenges, indicates AT&T's resilience and effective cost management.
So would you say this is a cause for concern or more of a neutral outcome?
It's more of a neutral outcome. The slight miss is overshadowed by the overall strong financial performance and strategic progress AT&T has made this quarter.
Strategic initiatives and market position. AT&T has been actively pursuing strategic initiatives. Can you elaborate on their recent moves in the market, John?
Certainly. AT&T added 288,000 fiber net adds and saw a 2.3% growth in mobility service revenues. They've also announced a significant $23 billion acquisition of wireless spectrum licenses, which will enhance their network capabilities.
And what about their capital return strategy?
AT&T repurchased $1.5 billion in common shares this quarter, demonstrating their commitment to returning value to shareholders. This is part of a broader $4 billion share repurchase authorization for 2024.
Operational efficiencies and future outlook. Let's discuss operational efficiencies. How has AT&T managed its expenses and capital investments?
AT&T's operating expenses decreased to $24.6 billion thanks to transformation initiatives and lower content licensing fees. Capital expenditures were $4.9 billion, reflecting continued investment in network upgrades and fiber expansion.
And looking ahead, what can investors expect from AT&T's future outlook?
AT&T has reiterated its full-year 2025 guidance, expecting low single-digit service revenue growth and adjusted EBITDA growth of 3% or better. They are also focused on managing their net debt, which stands at $118.8 billion, to maintain financial flexibility.